So now as we move around the markets, we're in these sort of marketplaces or states where we're calling it the watch and act, aren't we? And what we're talking about there is the Queensland market, the ACT market and the South Australian market. So let's start with Brisbane. What are your views, Bryce?
Yeah, Brisbane's been 2015. It was a really strong market for us to buy for clients. So we saw that historically, Brisbane's always lagged Sydney when it's done a really big cycle. 01 to 03 was the last one, and then Brisbane had that lag. So it's just kind of, we saw history repeating itself, largely becoming an affordability story where,
very much so.
as you know, people don't sign up for that big sort of home to work, work to home sort of drone that comes from owning $1 million average property in Sydney, where they go, there's got to be a better life. And as we were talking about during the week, in terms of the bigger incomes on offer in Brisbane, they're not quite there yet. So I think our clients who've been buying there have been buying at the ground level and the first level. And I think that hopefully through 2016, we'll see some price movements from that. As people start to realise that Sydney market, that affordability and that lifestyle change is appealing as long as they can get a job.
Yeah, I just didn't think we didn't see the rocket ship.
No.
And that's fair and that's reasonable. And the reason why we didn't, and not that we were expecting it, we went in there due to the affordability story and that opportunity to buy really quality assets close in. Because we know that the future population forecast of the city is it's staying. The River City has got a very prosperous life ahead of itself. So with that in mind and with the affordability story behind it, we're trying to get ahead of the bell curve. And so for me, I think the reason why we didn't see a lot of rubber hitting the road was the economic story. The economy was sluggish. Campbell Newman, sort of took a lot of jobs out of the marketplace there in terms of government jobs. So it needed to do that. It's a mining centre. A lot of sort of head offices of some of the mining areas up northern Queensland were based there, and so they had some scaling down. So I think what we are going to see is Brisbane. It's not. Well, it is the poor cousin, but it won't always be that way. I think we'll see more growth in 2016, and I would still be picking the eyes out of it. But obviously there is a supply story in that as well.
Yeah, I think the principle on the whole fly around is to avoid oversupply potential through house and land and brand new. And in Brisbane more so than ever, because it doesn't have the security of the massive city to protect it. What's always interesting about Brisbane is the fact that it is the River City. So unlike Melbourne and Sydney, where you had that traditional stigma with being in the west, you don't necessarily get that in Brisbane because the river runs all the way through. So the two drivers in Brisbane are proximity to the river, proximity to the city. And if the river, and it sort of undulates beautifully through the western suburbs, so you get some amazing real estate in the western part of Brisbane. So it's, for me, I see a lot of people, if we rewind a year, lots of people were saying Brisbane's the place to be in 2015, and I think that's true. But what I think, in my observation, I think some interpretation was lost because I saw a lot of people buying too far out, too wide. And I think that might expose a few of those investors. I personally and professionally preferred to keep as close as I could to the CBD for the reasons we talked about. It's growing up as a city, but it's not quite Melbourne and Sydney in terms of those jobs. So I think the safety of being closer in was something that we focused on heavily.
I agree. I think if you look at it from a demand-supply point of view, and if you look at those fringe areas of Brisbane, what you saw was really cheap house and land opportunities there. And so people are thinking it was a no-brainer. But as you got a little bit closer, those sort of $500,000, $600,000, $700,000, $800,000 houses that, would be 25 kilometres in Melbourne and maybe 50 kilometres in Sydney in terms of affordability were actually there. And they are the scarcest assets. And if people had a choice, they'd probably live closer to the city. So we went in there and we're probably, one of two or three companies we think smart enough to go into there, whilst lots and lots were sort of playing in those other areas. Now, if the wage growth doesn't come, well, it's certainly not going to come for the lower socio-demographic workers. It's going to come for the middle and upper management first, because guess who middle and upper management give pay rises to? Themselves.
No.
So, you better believe that, and they justify it somehow. So the reality is that those areas aren't going to move, in my view, as quick as the areas closer in, purely because of that story of the convenience lifestyle element, and the professional people want to be in with the other sort of groovy people, and that's how you get that sort of livability score and that growth that we're looking for.
And as you know, Ben, it's always there's no point giving someone $1 to get 30 cents back. Economically, that's just stupid. And but that's the principle behind depreciation. So a lot of people are being seduced into buying in Brisbane because of the depreciation. But if you're 40 k's out, in our view, in that market, a little bit too far out. So moving forward in Brisbane, I am more than ever staying as close as I possibly can. Blue chip Brisbane.
Yeah.
We've even been buying last year 2-bedroom flats or apartments in established blocks very close in. And Brisbane's not traditionally an apartment city. It's, if you go to Brisbane, people want to live in a house. So we were very strategic about the price point that we went in, which was sub 400,000. But we're getting fantastic yields. We're in the best suburbs. We're in the best streets. We're close to the best amenities. And as that city's population continues to grow, they are going to become more and more popular, despite the fact that Brisbane, Perth, and Adelaide, they're more house cities than they are sort of Melbourne and Sydney, where we're quite comfortable in medium density living.
I totally agree. I think we've done a good summation of Brizzy. Let's look at quickly Sunshine Coast and Gold Coast. For me, Sunshine Coast, very much what I like about it is the vacancy rates are low. So yield's actually pretty good. So if you want that sort of traditional yield play, so I still call it regional. So if you're chasing a bit of yield and you want a bit of growth, but just be realistic that it'll go and then flatten out, So unless they can get bigger industry into those particular areas, it'll always sort of be that cyclical market and very easy to predict when it becomes scarce supply, shortage of vacancies, and then you've got that sort of yield story. The investors and the owner-occupiers start dabbling in it a little bit, and you see that value growth, and then it stagnates. Same with the Gold Coast. Same type of story. So both beautiful areas from a livability point of view, but we will certainly be looking in those marketplaces this year. So coming back to our whole watch and act, they are in our watch and act areas for potential opportunities.
Yeah, look, I've lived on the Gold Coast, and the lifestyle benefits were amazing, but I've also commuted from the train on the Gold Coast into Brisbane, and if you're at the bottom end or the southern end of the Gold Coast, it takes an hour and 30 minutes to get in there versus being on the northern end. You can cut off some of the train. So for me, the types of assets that you're going to buy in these locations, you still need to keep an eye on the human interest, human behaviour is very strong, but it's the economic activity. Where am I going to get my job from? Where am I going to get my 6-figure income from? And do I need to commute to Brisbane? And if I do, keep that in mind in terms of the purchases. Yeah. So as you say, it's on our watch list.
Yeah, because you'll get those 2-bedroom flats or 2-bedroom townhouses or something like that, and they'll rent forever because there'll always be that young person looking to sort of travel around and settle in and do a surf holiday or whatever. So they will always be fairly well occupied unless there's mass supply coming in. So be careful where you're buying from a supply point of view. That's what so expect steady growth but good yield. So if you need cash flow in your strategy and in your portfolio, those are the types of areas you might look.
Yeah, mining, Queensland, just ignore it.
Yeah.
I mean, there's too many bloodbath stories of people that are in mining towns. So Gladstones and Mackay's, and we've got to be careful about something that's dominated by mining. But if there's a lifestyle element, and mate, that's your baby up in Cairns. You've run over Cairns.
The Cairns story is agriculture, retail, construction, tourism, right? And when you've got a construction boom going on there, the world is a happy place because values go through the roof. And that's what we saw. The Cairns story is one of opportunity cost. So, you're basically bottom feeding in a market that effectively the bottom fell out of. So, property prices are what they were in 2007 through 2008. So, you're cherry picking the bottom. So it's a little bit more speculative, and I don't like that word in property, but if you're going in there, it's higher risk, but potentially higher reward. Low Australian dollar, we'll start to see the backpackers coming in and their parents will follow them, and we've got the Chinese dollar for tourism coming in. So medium to longer term, there's some pockets of Cairns I like. Some, just be careful of your costs around the holding costs, because you can get a 10% yield, which will turn into be a 5% net once you pay all your costs. So, do your numbers tightly on that particular market. But again, it's a really watch and act.
good yield play with some potential for some upside
Great.
for growth.
I reckon that wraps up Queensland. Let's look at the ACT quickly.
Yeah, interesting, isn't it? Because after the last change of government, the sentiment shifted, was out of there. But they've got strong incomes there. And we know that's a very high driver for property performance. And so you actually like ACT a bit,
Well, I
don't
think it's just been the forgotten child. I mean, definitely, we keep repeating ourselves, but high density and medium density apartments have cooked that market. So it absorbed a lot of the rental supply as well. So the thing I'm watching there is if that vacancy rate starts to tighten, because I've got really high disposable income, second highest in the country, and I've got vacancy rates coming in low, I've got capacity for growth with a good yield component to it as well. So that's what I'm looking for in our capital city. There has been a little bit of a mini construction boom going on, so I'm sort of trying to understand why it is, because Canberra, even though it can be cold, is a very livable city. It's got the #1 university in Australia, so it's also got that really strong international students coming in. And again, with counter-terrorism and sort of security and medical, all of that type of stuff says that it gets a lot of government funding as well. So if those jobs are available, it's a pretty reliable and stable market. And because it's probably been a little bit on the nose, I've got to watch and act on that one.
No shortage of job opportunities in Canberra. So there you go. Watch and act from Ben on that one.
Now let's move into South Australia. So what's the read on South Australia for you?
Yeah, well, I think there's a lot of opportunity in 2016, but I think more than ever, a bit like again rewinding 12 months ago when we said being in Brisbane, you need to be very careful about where you went. I think that's the story of Adelaide, because it's underperformed for so long, but its economy isn't charging along in huge sort of momentum, and they've got lower incomes and therefore lower capacity to pay rental. So I think the outlook for Adelaide is good in the right areas. But again, I think if people just read the headline and buy there, I think they could get easily burned.
Yeah, I think there's a bit of that in the media now about is Adelaide the next hotspot? I hate that word, but the reality is markets within markets. So our formula in those types of markets is looking for really quality, scarce assets. That's all you need to say. You find them, they're only going to get scarcer over time, and you're playing in a marketplace that I suppose is coming off the bottom, and so I think there's some medium long-term upside in that market. So good buying opportunity. So watch and act for me.
And the tip for the viewers is don't bring your Melbourne and Sydney hat and overlay the principles in Adelaide, because they don't care how close they are to the train station, because it's the 15-minute city. They drive wherever they want to be, and they don't worry about parking, because if they can't get a park out the front of where they want to be, they'll cut a lap around the block and there'll be one available. So don't overlay your Melbourne and Sydney principles in Adelaide, because you'll be disappointed.
Yeah, your demographic principles still apply, but where you might have, say, 500 or 600 suburbs that have a good demographic profile in a Sydney market, you might have 25 or 30 in Adelaide, so it's very particular about what you're looking for.
The interesting thing for Adelaide is they often are they're almost the Irish joke, aren't they? Why would you go to Adelaide? What are you going to do in Adelaide? But there's lots to do there. But it's important to realise that there are people who live in Adelaide on good incomes. Now there is a brain drain, as you call it, into the bigger cities, but there are doctors and lawyers and solicitors and people who earn significant incomes who have no desire to move away from Adelaide, and they're the ones that will continue to drive the price. Yeah,
and I think with that brain drain that sort of has been occurring for the last 20 years, these people are now maybe got young kids, they've coupled up, and they're thinking, let's get back into a community that we can have more quality of life. So it doesn't matter if we have a smaller salary. So if some of that brain attraction comes back into that marketplace, then again, you're going to see bigger companies look to set up there, because from an affordability, from a company perspective point of view, it's actually very cheap to run a company there. You've just got to get the right talent to take your business forward.
It's actually a really good point you say, because it's a bit like Geelong. You don't really want to buy a property that has the ideal tenant in the demographic between 18 and 30, because they've left and gone to Melbourne. But then they want to come back once they have kids and go closer to mum and dad. That's the same with Adelaide. If they do move interstate for another job opportunity, it's usually around the time that they have their kids that they want to come back. So that's a little slipstream that you want to avoid in terms of the demographic.